talk about personal finance. Faye is here to walk us through the PF Corner. Faye, what's up for discussion today?
Well, we're going to talk about a very interesting product that Motilal Oswal's mutual fund company has brought in, and let's take a look at it. I'm going to bring in Dhirendra Kumar, who will tell us if it makes any sense. Dhirendra, Motilal Oswal has launched a value index, which is effectively like an STP or a systematic transfer plan, which is being sold as a product for the first time. Now, under this facility, investors can transfer amounts to the Motilal Oswal Ultra Short-Term Bond Fund, and from that, the money moves to the Motilal Oswal Focus 25. And this is based on the value index levels. And the fund decides when those transfers need to be made. Does this product show any sort of promise for you? Is this something we should consider as investors?
It is always a good idea that even if you have lump sum money, lump sum amount to invest in an equity fund for the long run, you should not do that, because the risk of catching a market peak is very high. So it is a good idea to be investing in a fixed income fund and move your money gradually into equity. Here the problem is, and here in this particular plan, the fund will decide the quantum and the periodicity of money moving by a certain algorithm, by a certain quantitative methodology. I would say that keep it simple. If you have some money, lump sum money to invest, move your money into a fixed income fund, which is from the same fund family with where you want to park your money, park your equity money. So selection of that the fixed income fund is not as crucial as it is a short-term parking ground, and the difference is not much anyway. And choose an equity fund with long credentials. This equity fund, the Focus 25 fund, has a limited history.
Well, the short-term debt funds are largely similar, but the Motilal Oswal Most Focus 25 fund is a very young equity fund with a limited track record. Should investors consider this fund at all?
This fund looks interesting, but as pointed out earlier, that Focus 25 is a fund with limited history, and this is always a good approach. When you have a lump sum to invest, put your money in a fixed income fund so that your money is earning to some extent, and then move into equity gradually. That eliminates the possibility of catching a market peak, which could be devastating for an investor who is getting started. So from purely that angle, the approach is right, but these funds are little unproven, and also I'm little unsure about the market level which will govern which will drive the allocation or investment into equity at what periodicity and in what quantum. I'm little unsure of that. So keep it simple. Put your money in a fixed income fund if you have lump sum, and move your money into equity if that is a long-term money.
All right, so keep it simple. In fact, we have a question from one of our viewers. Satya has written in. He invested 10 lakh rupees in the HSBC Flexi Debt Growth Fund 6 months ago. And he tells us it's been in the negative since. He wants to know if he should switch to some other fund. What would you recommend he does, Dhirendra?
Dynamic bond fund should be considered for investment of few years. And in 6 months, of course, the market has been extremely hostile for these funds. And what happened in July was very disappointing, but it came as a surprise, and that is a risk which you always carry when you get into a long-term bond fund or a fund which has the flexibility to be across the maturity spectrum. So I would say that if you have the time on your side, I think in next 2 years' time these funds will have their day. But if you don't have the time and you accidentally landed in this flexi debt fund, move your money out and choose the debt category, choose the debt fund based on your time frame, and that way you will not be disappointed. You have options to choose from. You get into a FMP, you will not be disappointed if that term matches with when you are likely to need the money. Likewise, you have liquid funds, short-term bond funds, or ultra short-term bond fund for various periods.